right, folks, we are back live again right here on Facebook live streaming and YouTube. After just finishing up our previous show here with Gary Boomershine, had a fantastic show. So Scott, producer Scott, come here to the front for a second. Have we got any folks showing up yet since we just went live a second ago?
No, but I'll tell you, we had
and Scott, we lost you. It says having trouble connecting you because of an unstable internet connection. So anyway, Scott, I don't know if you can hear me or not. So I'll pretend you can, and I'll keep moving forward. So as you all are, oh, there you are, Scott. Can you hear me?
I can hear you fine. Sorry, I disappeared.
Awesome.
Technology. We have 5 people that have already joined us.
Oh, wow. Okay. So as you are coming in, folks, let me tell you, my special guest that I'm going to bring on here in just a couple of minutes, Fernando Angelucci. I just love to say that word, Angelucci. I mean, it's like, it makes me want to eat pasta or something. Anyway, so... Oh, we got Cheryl back with us. I heard you both from the beginning. Cheryl, I can always count on you to tell the truth. Thank you, Cheryl. Dan, all the way from Indiana. Welcome back to this show, Dan. You were on the last show. Glad to have you back. Everybody, as you are coming in right now on the live stream, you may be on Facebook. You may be watching on one of our YouTube channels. Right now, below the video, type in your name and your city and state. Type in your name right now below the video and your city and state. We want to know where you are tuning in from. You're going to be excited to meet my special guest here in just a moment, Fernando Angelucci. He is amazing. He's entirely too young to have accomplished what he already has in his less than 3 decades here on the planet. But he's going to be talking to us about self-storage and how it's different from other asset types and how he is just knocking it out of the park right here in the midst of coronavirus. And he's going to be talking to us about how he's doing business different than he was 4 weeks ago. So again, as you are coming into the show, right below the video, type in your name, type in your city and your state and where you're tuning in from. We're definitely going to want you to ask Fernando questions about his business, and we want this to be engaging. So we got a few folks on here, Scott. So I tell you what, let's go ahead. Oh, there we go. We've got Dennis tuning in all the way from Philadelphia. Welcome back to the show, or welcome to this show, Dennis. We're glad to have you. Everybody else, if you have not said hello, type in your name, your city and state below the video. We want to know where you're tuning in from. So we've got Indiana represented. We got South Carolina represented. We got Philadelphia represented. So everybody say hello to everybody right there below the video. All right, Scott, let's go ahead and kick off this show officially, and I'm ready. Well, hello, everybody, and welcome to another episode of Real Estate Investing with Jay Conner. I'm Jay Conner of the Private Money Authority. I'm your host here for the show. And if this is your first time to tuning in, we talk about all things as relate to real estate investing. How to find deals, how to fund deals without relying on your hard money lender or your local banks, how to sell houses fast, how to automate the business to where you can actually make a killer living in less than 10 hours per week, how to get everything automated. So my special guest today, you're definitely going to want to stick around all the way to the end of the show. I'll be introducing him in just a moment officially. His name is Fernando Angelucci, and you are going to be amazed at Fernando and his story and what he has to offer. He's going to be talking to us about self-storage, how you can find these deals in automatic, how you can get them funded without relying on your own experience or your own relationships with banks or hard money lenders. And here on the show, Fernando is going to give you an opportunity as to how you can actually be a passive investor to where all you have to do is just sit back and collect checks. So we'll bring Fernando on here in just a moment. But before I bring Fernando on, I've got a free gift for everybody right here in the midst of coronavirus. So if you're new to the show, I'm known as the Private Money Authority because back in 2009, for the first 6 years in this business of real estate investing, I was relying on banks to fund my deals. And due to the global financial crisis, I was cut off from the banks with no notice, had no way to fund my deals, and it was a blessing in disguise. I discovered this wonderful world of private money. I was able to raise over $2 million in less than 90 days. And since January 2009, I have not missed out on a real estate deal because I did not have the funding. And guess what? You can learn very quickly how to enjoy the same success that I did and I do. I've got a free on-demand online class. And yes, you're home. You got plenty of time to watch it. It's actually less than an hour long. It's free training on how you can have zero funding to actually having in the millions of dollars in funding without relying on relationships with banks or hard money lenders. And so here's the website as to where you can go learn the 5 easy steps on getting private money for your own real estate investing business. That website is www.jayconner.com/money podcast. That website again is www.jayconner.com/money podcast. If you happen to be tuning in on the live stream on Facebook or on YouTube, be sure and say hello right now, right below the video. Type in your name and your city and state. We'd love to know where you're tuning in from. And in just a moment, when I bring on my special guest, be sure and ask your questions to Fernando so we can get all of your questions answered. If you're tuning in on iTunes or on Google Play, be sure and go below, scroll down and be sure and subscribe, rate, and review. If you're on YouTube, be sure and subscribe and tap the little bell so you are notified when we go live so you don't miss out on these fantastic shows and expert guests that I have here on the show. Well, as I mentioned, my special guest today is Fernando Angelucci, and Fernando is the senior managing partner of the Titan Wealth Group. As of today, he's less than 30 years old, which makes me want to throw up in a good way. Fernando is based out of Chicago, Illinois. And listen to this, folks. When Fernando was only 16 years old, that's when he read Rich Dad, Poor Dad, the book that I know you've heard of. And then right after that, when he was 19 years old, he started his first business while he was attending the University of Illinois. And what an amazing story he has. He got his engineering degree, so he's a thinker brain. However, he doesn't talk or act like a thinker brain. He's got his degree in engineering back in 2013, and then he went to work with a Fortune 50, not Fortune 500, but a Fortune 50 company, and immediately started investing in single-family houses. By the time he was 23 years old, he was able to replace his income, and he exited the rat race of the 9-to-5 life. And he went on to begin investing in his single family and multifamily properties. He is now an expert and brilliance in investing in self-storage all the way across the nation. He raises funds from other folks to invest with him in his self-storage syndications. And with that, Fernando, welcome to the show.
Hey, Jay, how are you?
Fantastic, Fernando. Angelucci.
Angelucci, you got to say it with your hands.
Yes, Angelucci. I mean, I just say your last name, and it makes me feel like I have a large grandmother ready to feed me pasta and bread. So anyway, Fernando, so good to have you back, my friend. We had you here on the show. I don't know, I lose track of time, 6 months or a year ago. And, things are different. So before we dive into your expertise of self-storage and et cetera, well, it is sort of diving in. What's been going on the past year in your self-storage business? What's going on? What's different?
Yeah, we're growing extremely fast. Have already closed on another $10 million in self-storage in the last probably 8 or 9 months here. We're creating a self-storage income fund for those that want, passive income that's backed by a hard asset by self-storage. We're also doing some ground up developments as well, and then sourcing properties for other investors. I've been getting a lot of calls as well to start some type of coaching or education program. So that might be coming here pretty soon.
Well, I know you would be a fantastic coach and mentor for those that would like to learn about that space. Well, Fernando, I want us to dive in here in just a moment, and I want you to talk about what you're doing different, what you and your team are doing different today in the midst of COVID-19 coronavirus versus 4 weeks ago as to what you were doing. But before we talk about that, let's give the audience an overview of why you have chosen self-storage over and beyond, say, single-family houses and et cetera. And by the way, if you're just joining us if you're joining us on the live stream, you may be on Facebook or YouTube. Go right below the video and type in your name and your city and your state. Type in right now your name and your city and state where you're tuning in from. And we'd love to know where you're from. Now, I want to make sure Fernando feels especially extra welcome. Everybody who's on the live stream right now, who's on the live stream, go below the video right now and say, welcome, Fernando. Welcome, Fernando. I want everybody right now below the video to type in the words, welcome, Fernando. So we've got Hot Dog Russell back with us from Washington, D.C. Hot Dog, welcome to the show. And we've got Elaine that is also back here with us. Elaine says, hello, I was just at your event a few months ago. I'm investing in both New Haven, Connecticut, starting investments in Memphis, and something about she loves Tennessee style barbecue. So anyway, Fernando, back to my question. Everybody is saying welcome, Fernando.
Hello.
So you should feel lots of love coming your way right now. So Fernando, why self-storage?
Yeah. So to kind of step back a little bit, as I was going throughout my investment careers, going from single family to multifamily, I thought that's the way that you're supposed to go to get to passive income, get to a bigger size property. There's gonna be less headache. Unfortunately, that's not what I experienced. And when I talk to a lot of investors, these quote unquote passive investments aren't very passive at all. We owned a couple apartment buildings in the Chicagoland area, and we were having, I was working on these properties every day. I had a third-party manager, and it was still, taking up a lot of my time. One of the big issues that we had was the eviction laws are so strong in Illinois and in Chicago specifically that it almost feels like I'm being penalized just for being a landlord. These tenants could stay in your units, not pay for 6-8 months, try to go through the entire eviction process. And, you can lose almost an entire year of income, which, that could be 3 or 4 or 5 years of profitability right there, just from 1 or 2 bad tenants. So I was looking for something that, number one, was truly a little bit more passive, still had, pretty good returns, and specifically something that was recession resilient or counter-cyclical. And as I was looking through the different options I had, when I fell on self-storage, I really did fall in love. It has some of the highest returns historically per real estate asset class. It does really well in recessions, and I can go through kind of how it performed between 2007 and 2009. It's a lot easier to manage. You can have one manager cover a lot more units, a lot more income than you can with, say, a multifamily or a bunch of single-family homes. Has very low break-even percentages, wonderful leverage that's offered to us by the banks, which I can touch on here in a little bit. And then it has a really high sticky factor. And by sticky factor, what I mean is, if I were to raise the rent on a $1,500 per unit, apartment building by 13%, let's say, or $195, most likely your tenants are going to move out and go somewhere else. But with storage, because we're dealing with much smaller dollar figures per unit, I can increase the rent on a unit 13%. Say they're paying $150 and I increase the rent by $20 a month. They're not going to, take the headache of renting a $400, moving truck, spending a day and a half moving all their stuff to go to another facility where they can save an extra $5. And then the last thing is, like I said, we don't operate in the world of evictions because we are guided by lien law. We have the auction process or the lien process, which is extremely favorable to the owner, to the investor, and allows us to rotate non-paying customers out of units within 30 to 45 days and get a new tenant in that unit the same day that it's cleaned out, which is a lot faster of a timeline than you have with, say, multifamily or single family properties.
If you're just joining me here on the show, my special guest today is Fernando Angelucci, and he is a brilliance when it comes to self-storage. And so Fernando is covering why self-storage, the benefits, et cetera, of other assets. So if you're just joining us here on the live stream, be sure and type in your name and your city and state below the video so we can know where you're tuning in from. We just had Ruby join us from South Carolina. Ruby, welcome to the show. Fernando, question. In single family houses, we got three kinds of cash. We got cash now, we got cash flow, and we got cash later. We got cash now, that could be wholesaling, that could be rehabbing and flipping. We got cash flow, that could be landlording, positive cash flow on properties. You got cash later, that's building wealth. You can build wealth through single family houses. So that's cash now, cash flow, cash later in the world of single family houses.
Yeah.
Compare and contrast single family houses to self-storage on those 3 points of cash now, cash flow, cash later.
Absolutely. So let's talk about the cash now, because I actually just closed the transaction last week. We wholesaled a self-storage facility in Hiawatha, Iowa. It took us about 30 days to do the underwriting completely, to get all of our documents. We found a buyer that was a 1031 buyer. He had to deploy about a little over $1 million, or else he's going to be hit with a $300,000 tax bill. So we locked up Hiawatha, the self-storage facility, for $800,000. We turned around, and within 15 days, we resold it to the 1031 investor for $1,032,000, and we walked away with a $232,000 check as an assignment fee. So that's your cash.
Shut the front door, man. A 200. That's like I'd never heard of that big of a wholesale deal on a single family house.
Right.
So
and it took just about the same amount of time to wholesale that self-storage facility as it does to wholesale a single family home, with not much more due diligence, really maybe 20% more time spent on the due diligence of that property.
All right. So let's have a little case study here on that deal, since you've got me all excited now. Sure. So how did you find the deal?
Yep. Found it from just calling brokers. We engaged a commercial broker out in Iowa. He said he had this property with an owner that was looking to retire. And we said, how soon do you need to close? And he said, the sooner the better. I said, okay, that's exactly how we operate here. If you can give us 60 days for closing, we can get that done for you without having to put any contingencies for a loan. And he was ecstatic about that, brought it to his owner. We got the price down to $800,000. And then after we took some photos and ran through all of the financials of the facility, we realized that we had a pretty good property on our hand, well below market value. And then so when we found our 1031 investor, they were looking for stable income that they didn't have to do a lot of work on, but they didn't want any partners. So this was almost like a match made in heaven there. And so we wholesaled the deal for him. We closed last Friday. And enjoying the $232,000 assignment fee.
So did you have the buyer lined up or on your list before you put the property under contract?
Yep. So the buyer was on our list from previous communications, and they just happened to just the perfect timing. They already sold their subject property, and I think they only had about 60 days left to close on a new property to be compliant with the 1031 laws. So we got there just in time with about 15 days to spare.
So in my world, on average, my acquisitionist and myself, we have to review 15 completed property lead sheets from sellers to buy one deal. That's on average. All right. How many deals do you and your team need to analyze to put a deal or a self-storage under contract?
Yeah, we're around the same range, maybe a little bit higher. So 15 to 20 deals that come across our desk. Our models, we send out an offer to everybody, even if they tell us they don't want one. And we usually will get anywhere between 1 to 3 under contract. And then throughout the due diligence process, 1 to 2 of those will drop off, and we'll close on 1 for every 15 to 20 deals that come in.
That's an interesting strategy, sending a offer out to everybody, whether you can't come to terms over the phone or they say they don't want an offer. What's your best guess as to what percentage of your offers are you actually able to negotiate a deal that you sent the offer after they told you don't send me an offer, or it didn't even look like there was a possibility of doing business over the phone prior to you sending the offer?
What we found is the majority of the deals that we take down, they don't sign a contract with us as soon as they meet us. It usually takes about 60 to 90 days to build the rapport to really get, to where we need to be on price and on terms. And what we found is the reason we send everybody offers, a written offer, is because, something can change in 6 months. They could have some type of life event that's going to require them to liquidate, or all of a sudden a pandemic hits the entire world and they don't feel comfortable with the amount of cash they have currently, and they want to they want to increase that cash stockpile. And the very first people they're going to call are the ones that they've already talked to and that already have some type of material in front of them. Sure, they could have gotten a bunch of verbal offers on the phone and it didn't work out, but when they have a physical piece of paper, a contract that was sitting on their desk or in a folder that they filed away with our contact information on it, we're usually one of the very first people that get a call back when someone's situation changes. And now that offer that they thought was too low before, they'll more than gladly take it, knowing that we can close cash and without any contingencies.
So when you send a written offer to everybody, is there a deadline on that offer, or is it open-ended, or what kind of time frame do you put on that offer?
Yep. So there's usually anywhere between 3 to 5 days for them to accept the offer. And then there's another 3 to 5 days for their attorney to review the offer to make any changes they want to the terms that are not associated with the purchase price. But that being said, it's always good for them to have it, because they can call back and say we're in a market that's better than it was when we initially made the offer. Then we can honor that offer. Or if the market has slid a little bit like it has now, we can also say, hey, that offer, like you see on the bottom of the third page there, it was only good for that 3-day period, but I'm glad you called me. Let's try to rehash this out now with today's current economic situation in the market and come to a deal that makes sense. That's a win-win for both of us.
My special guest today is Fernando Angelucci, brilliant marketer and self-storage entrepreneur. Before we close out the show, Fernando, you also have a syndication where people might be interested in being involved in the self-storage business, but doesn't want to go through the hassle of finding deals, negotiating deals, and finding buyers. How can people become involved with you on that in that way through your syndication?
Yeah, so everything's always a relationship, right? So we'd love to get to know who you are and what your goals are for not only your investments, but just for your life in general. And then we can match you up with deals in our pipeline that would make sense. Some people, they need cash today, so for them it would be better to come into an income producing property, or maybe even a fund of income producing properties that can spread their risk across multiple properties, multiple geographies. Some other people that don't need necessarily any cash today, or maybe they have too much cash today, and they actually need to, drop their taxable situation, or are just looking to grow their nest egg, then maybe a development style deal will be right for them. One where we're going and we're finding a market that has not been completely penetrated yet. We're building Class A REIT grade, facilities that are 100,000 plus square feet, stabilizing it over a period of 3 to 5 years, and then selling it to a REIT or a publicly traded company at, usually anywhere between 1.5 to 2 times our initial investment in the deal.
Wonderful. Wonderful. Well, Fernando, thank you so much for joining me here on the show. And again, folks, the way for you to reach Fernando and connect with him, well, let's just tell everybody, Fernando, because we got a number of people listening on the podcast. How can they connect with you?
Sure. So on all social media, I have a new social media handle. It's The Storage Stud. So Woo! The Storage Stud. You can also find me at the. You like that, Jay?
I like that. I mean, you need to have a special session to help someone, to get someone to help you with your self-image.
Yeah. So you can find me anywhere on, LinkedIn, Facebook, Instagram, Twitter, at The Storage Stud. You can go to our website, thestoragestud.com, or if you'd like to, communicate with us from the investment company, you can go to titanwealthgroup.com.
That's wonderful. Well, Fernando, thank you so much for being with us here on the show, man. I appreciate you, brother. I love your heart.
Yeah, I appreciate you. Thanks so much, Jay.
All right. God bless. All right, folks, there you have it. Thank you for joining us here on another show. I'm Jay Conner, the Private Money Authority, wishing you all the best. And here's to taking your real estate investing business to the next level. We'll see you on the next show. Bye for now. All right, Fernando, you still with us?
Yes, sir.
Excellent. And we still got a bunch of people here on the live stream still with us. So, Fernando, thank everybody for joining us.
Okay? Yeah, thanks, guys. Appreciate you making me feel welcomed.
That's awesome, man. Well, Fernando, our next mastermind is going to be virtual. I guess you heard that.
Mm-hmm.
Have you been on the Friday mastermind calls?
I have. They've been really great.
I've been there too. Phenomenal.
A lot of great knowledge out of it.
Jason and I text about every morning at 7:30.
No kidding.
I always have to give him a little checkup from the neck up to make sure he's okay.
That's good.
All right, Fernando. Thank you, man. Anything I can do for you?
Right now, I'm just trying to provide as much value as possible. So I was actually about to ask you the same thing. What can I do for you, Jay? Is there anything that I can help you?
Yeah, you can send me your self-storage training.
Sure.
And when you start your podcast, you can have me on your show.
Yes, that'd be great.
All right, man. Thank you, Fernando. Scott, are we good?
Thank you.
We're good. I was going to say, Fernando, if you know of any self-storage units in North Carolina near the coast,
Yeah, we actually just closed on one in North Carolina. It was on the west side, though. It was in Franklin, North Carolina, in the mountains there.
Oh, yeah. Beautiful.
Beautiful area. Great trout fishing. Yeah, but we love the Carolinas, especially around, Charlotte, Raleigh, all those areas, that whole little triangle there. Wonderful. Yeah, we'd love to do a deal with you.
So, Fernando, I do have one little question before you go.
Sure.
And that is, there's so many houses that there's always somebody buying and moving and selling, and all the rest of it.
Right.
But when I think of self-storage units, I don't think that way.
Right.
But I guess in terms of the whole United States, there are so many that there's always somebody buying and selling, wanting to get rid of.
Yeah. So it's estimated that there's roughly 70,000 self-storage facilities in the United States. The nice thing is, unlike single family or multifamily has a ton of investors hammering at them, usually when we engage with a seller, especially if it's an off-market deal, we're the only buyer at the table, which allows us to drive up our cap rates. Right now, on average, our day one cap rates are floating between 9.6, 9.7%. And once we do the value adds, we're stabilizing these properties at anywhere between 12 to 16%. So once you add the leverage on top of that, our cash on cash returns are in the 50+% range.
Nice.
Yeah. Some of the properties are infinite. We're actually closing a few. We have a couple banks that really love self-storage, and they're offering us 100% leverage. So we don't have to put any money out of our pocket.
Wow.
Yeah.
So why don't you want to keep this a secret?
Well, the way I look at it is, I come from a place of abundance. I have a truly an abundance style mentality. And what I found is the more people I help get into self-storage, eventually they're going to come to a deal that they can't close on their own, right? And who are they going to call? They're going to call Fernando and say, hey, Fernando, thank you for giving me all this information and help me get my first couple self-storage facilities. I have a big one I can't take down myself. Do you want to partner with me on this $10 million deal? And my answer is always yes. I've actually already closed a few deals with other Collective Genius members. John Carcone and we closed on a deal in Alabama, actually at the last mastermind. We were at the mastermind and we signed everything virtually. We got another 2 that we're closing with him. We have April is going to be buying a facility with us. We have a couple of CG guys that we're going to be partnering with. And these are all deals that for some reason I couldn't get in my funnel. I must have missed them somehow. So these guys are bringing me deals that I wouldn't even had access to in the beginning. And I'm taking a small piece just to show them how to underwrite it, how to manage it, right?
All right.
Hey, Fernando, I just looked in my cell phone thread, and I met you and Steven at CG going into that meeting room March 22nd last year.
There it is.
Wow. Yeah. A year and a month.
Yeah.
Fernando, I have Ghostbusters theme song running through my head now. Who are you going to call? Storage Stud.
That's right.
I love it. Well, Fernando, I'm going to let you go, my friend. Be in touch.
Thank you for your time, guys. I really appreciate it.
See you on Thursday, Fernando.
See you on Thursday, Scott.
Bye-bye.
Bye.
What's going on Thursday, Scott? Am I missing the party?
I'll tell you, Jay. Wendy and Bill have a investor.
Oh, so you got Fernando on Bill and Wendy's on Thursday.
Well, Bill has them on Bill and Wendy's. I have nothing to do with it.
See, Fernando, I've got this figured out now. So I was Scott's first podcast client for doing all this production stuff 2 years ago.
Yeah.
So I did all the work of getting these 100 fabulous guests lined up for my show, and then Scott just steals them and takes them over to his other client. Right?
I'm discovering that it's a small world.
Small world, yeah.
Because Fernando last week, I don't know who it was, sent him the wrong date and time. So all of a sudden, Fernando's, when is it starting? How come it's there? I'm in. It's not happening, and everything. I'm like, what's he talking about, right? And then and then it's also like, well, is it Thursday? Is it last Thursday? Is it next Thursday? Is it this Tuesday? Like, which one? And then we finally got it all straightened away. It was pretty funny.
All right. Well, I'm so glad I could be a connector.
Yeah. Thank you. I really appreciate it.
All right, Scott, are we good?
We're good, Jay. Thank you very much.
Thanks, everyone.
Whoa. Wait a minute, Fernando. I need you to email. Have you got you don't have my Inner Circle Gmail address, do you?
I don't think so.
But you got Scott's email, of course, right? I want you to email Scott that microphone that you're using. I love the microphone. Will you email that to him when we hang up?
Absolutely.
All right, awesome.
I have to tell you a secret now that Jay brought that up. When I started podcasting in 2005, I had, like one mic, right?
Yeah.
And then a few years later, I opened my kitchen drawer and there's 30 mics there because I did exactly what Jay did. It's like, oh, I love the sound of that mic. What mic have you got? And I'd buy it, and then I'd use it until the next guy had a mic I loved the sound of. And then, what's that one? And I'd buy that. And over the years, it was bigger and bigger and bigger.
Oh, my.
I'll definitely send you over this mic here.
All right. Thank you much.
Thanks,
See you guys.
Talk to you later.
Bye.
Bye-bye.